All right. Good day, mate. Oh, yeah. How's your mum? Welcome to QuantBox Live. It's oh my God. I'm totally 15 minutes late. I swear to you, I was at my desk early. 6:45 in the morning. I'm sorry. Yeah, all I can say is I'm sorry. Anyways, let's get on with it. Welcome to QuantBox Live, where we get our global macro on. At QuantBox, our AI-driven data analysis of sentiment, inflation, employment, GDP, technical trends, open trade positioning by both retail and institutional, and seasonality and market sentiment. Uncovers the best fundamental investment opportunities across global markets for you, and it does it automatically, and it uses very pretty colors. My name is Wayne McDonald. I'm the founder of QuantBox.co. I'm also an economist trained at a little school called Harvard, which is kind of cool. Right on. Oh, we got a hot mic. Let's see who's got the hot mic. I don't know. I guess we got it. All right, cool. Um, yeah, no, it's still there. Who's got the hot mic? Let me see. Beep, 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 beep. No, there we go. I found it. All right. Turn mic off. All right. Cool. Anywho, so who am I? Well, I've been trading for a couple of decades, and I've always had to do the hard work of trying to uncover why the markets are moving the way they're moving. And to do that, I had to do deep dives into fundamental research. Started way back when I got my Series 3, which is a National Futures Association test on fundamentals. Um, and it really exposed me to why currencies were moving around the world. It might be to go get to buy wheat or to buy oil, for example, or to a flight to safety. And I started learning all these things. I'm like, wow. So I started doing things like tracking economic data. Okay. And then you're right. So things like GDP, inflation, unemployment levels, interest rates, the differentials. And then I started learning about positioning, which is the commitment of traders report. And then I started learning about seasonality. And then obviously I've always been a technical trader. And right. And then separating market forces from, let's say, macro trends and news versus fundamentals and all that kind of stuff. It used to take me a lot of time and a lot of money because I had to subscribe to a whole bunch of different services to get these things. So, like the Commitment of Traders report, I used to download, 20 years ago, the actual database. It's an Excel spreadsheet, and the CFTC still provides that information. But it took a lot of work to do all the things. You had to do your own calculations to figure out the net positions and the change in the net positions. And then I used to pay, I think, about $300 a month for a service to at least make it visual, kind of like this, not this pretty, but you know. Um, well, now QuantBox does all of that, right? So the fact that it's automated, QuantBox is going into a lot of different databases around the world, private databases we pay money to, or government databases that we access directly. QuantBox does not scrape the internet and steal the data. We're plugged directly into the databases. So, anyways, it automates the process of doing all this research. And I know fundamentally why the markets are moving, and I know exactly how the markets are moving right this second, thanks to the new updates to QuantBox. So, anyways, very nice. It's a great way to gather your thought process towards these different asset classes. Okay, organizing your thoughts to make better decisions. Hey, if you're watching this on YouTube, guess what? You're watching a very delayed video. It's delayed many hours. It'd be cool if you could swing by and join the community. Try it out. It's $8. In that, you get a training course on statistical analysis, and you get a training course on macroeconomics. So combined, it'll probably take you almost, I'd say a good 18 hours, all included for the $8. Okay. So, anyways, let's get on with it. Let me remind you that trading is risky, not appropriate for everyone. Your past performance, good or bad, is not necessarily indicative of future results. Please stay small, stay humble, focus on the long term, never risk money you cannot afford to lose. Let me log in. By the way, it's good to see everybody. Again, I apologize for being a few minutes late. Here's the courses included. YouTubers, hey, come visit us. Oh, this is no longer available. I have to take that off. I don't know why that's still there. We'll get rid of that. Anyways, cool. So this is Tuesday the 8th. This is yesterday's video. So today must be Wednesday the 9th. Is that right? Is it Wednesday? Wow. Yeah. Holy smokes. Wednesday already. Okay. So when you get this, you're like, man, it don't work none. No, it's working. QuantBox sits on the Google Cloud. So I'm inside QuantBox, but I can't access the database unless I'm logged into the appropriate QuantBox Gmail account so like when you become a subscriber, I ask you right away, what Gmail account do you want to use? You have to use Gmail. This is sitting on the Google Cloud. And then another recommendation, if you get a can't access report, use Google Chrome. Some people are using other browsers, and Google, I don't know, probably on purpose, wants you to use Chrome. So if you have problems, use Chrome. Make sure you're trying to log into the right one. Also, make sure that the browser itself is logged into the appropriate account, Gmail account. Okay. So, anyways, so if you get this message, you're inside QuantBox, but you can't access the Google Cloud. So make sure you have the right Gmail, both for the browser and the one you're selected, because I have like 14 Gmail accounts. That's why every day I have to do this process because I'm not logged into the right Gmail account. Cool. Okay. Mark's like, yeah, I'm guilty of that. LOL. Yeah, I'm talking about you specifically, Mark. No. Thanks, Mark. No. But yes, but no. Yes, but no. Uh okay, good. This is I yelled at people yesterday. Oh, it's the highlight of my day. You're right. Yeah, to publicly shame people that work for me. Yeah, it's great. So, anyway, so we got some things fixed. Tails tucked between legs, but things are working. That's good. Hey, I have to do it because I work for you and they work for me. So it's got to work, you know? So, anyways, yield on the 10-year still farting around 4.0. Not long ago, we're at 4.2. There's going to be a point where that's attractive. And we were at 4.2, then 4.1. And then even for a little bit, I think it was yesterday or the day before, we were at 3.99. So something's going on. People are buying some of those treasuries and locking in that 4.0. Okay. Cool. Interesting. Now, oil. Oil. I missed it yesterday. I was staring at it, staring at the, I was staring at it like $80.25. And then something happened. I had a crazy day yesterday. Something happened and pulled me away from my desk, and I was away for a while. And then I came back and it was at 81 something. I'm like, oh no, I missed it. So I'll catch the next pullback. And then something came along, something else came along, pulled me away from my desk. And oh my God. So here we are at 84. And I had oil directly in my sights at $80. I mean, square in the middle of the scope. And I never got the opportunity. And now it's up $4. And let me tell you, that's a lot of money. That's a lot of money. So, anyways, that's like missing a 400 pip trade. Thing is, it happened in about 12 hours. Ugh! But, anyways, it happens. Life is complicated. Makes forex seem easy, huh? Anyway, so gold kind of flat, S&P 500 kind of flat, but at 45. Okay, cool. Cool, cool. Not up is kind of the interesting part of this. Most, I think, basically all of the S&P 500 is reported now. So we'll see what happens with CPI coming up. See if that impacts S&P 500. Euro dollar still below 110. Bitcoin still below 130 or 30,000, but remember it was 29,000 not long ago. So there's a bit of risk on here. Okay, a little bit of risk on. I click on the gauges. And by the way, I'm sorry. I know I can make these a little bigger for you. And look at, we've lost all that bearishness. By the way, do you guys like this page? Like you just go there and you're like, this is a great opportunity to lose money today, huh? What's going on? Nothing's right. I'm torn. Yeah, nothing's going on. The hidden news here is it was very bearish and now it's no longer very bearish. Huh. That's right. This is only on the pro account. Yes. And if you're like, why doesn't the retail account have it? Why can't you just add it? Here's the truth of the whole thing. This is an active live database, and I can't, like a web page, I can't just copy and then paste this over in retail. We would have to rebuild it from scratch. Everything, the data tables, the algorithms, everything, and then all the pretty colors. It's literally, I have to rebuild it. So it's like for everything, not just this, for everything. So I wish it was simple. Like I'll give you an example. All right, let's do some yen pairs, right? Okay, Aussie yen. Great. So cut, paste, let's and then call it CAD yen and just change the currency pair, right? No, you have to rebuild it all from scratch. I know. Sucks, but yeah. So, anyways, that's why. So, yeah, it just cost all that extra money. So, I give to those that have committed for a year because I'm reinvesting their money. Oops, wrong one. Okay. So, anyways, that's how we got to this situation. um, yeah. Anyways, that's how I got to this situation. Now, to make it interesting, I've actually priced the pro membership cheaper than the retail. So you kind of see what I'm doing, and I'm like, I hope you see what I'm doing. I'm trying I'm trying to get you to commit longer term so I can keep reinvesting and build this long term. Otherwise, long term, I'm screwed, right? So, anyways, I'm trying to make it so unbelievable. You're like, wait, it's cheaper? Yeah, to commit for the year, you get way more, and it ends up being cheaper. So I'm asking for the commitment. Anyways. All right. So, anyways, taking a look at sort of the medium term here, a decline in VIX. Okay. Which gets interesting because then you're going to want to see an increase in S&P 500, and we don't see that there. So this is truly a mixed bag market where a lot of things are not quite making sense. So how do we make sense of that not making sense? Nobody's trading. Hmm. Okay, nobody's trading. No, we'll probably get a market move. What is it? Tomorrow we have CPI or today? Is today Wednesday? It's usually a Wednesday. Do we have CPI today or who's got this? I think it's tomorrow though for some reason. Yeah, it is tomorrow. It's weird. It's usually a Wednesday and it's usually the 15th. Um, but I know it's off this time. So, anyways, yeah, it's not today, it's tomorrow. Um, yeah. So, anyways, interesting. Now I'm a little scattered today, so I'm jumping all over the place. I apologize for that. I want to interesting. I can't organize it that way. I have to talk to the fellas. I wanted to uncover. Do I have to find it from yesterday? Let's see if I can get yesterday. No, I can't go backwards. Interesting. And I can't pick a. All right, I'll have to talk to the fellas. I want to go backwards in time, and but I'm not going to be able to on this. All right. Does anybody have the China import export date from data yesterday or last night? I don't have it here. China had bad import export data. Or no, wait, I am talking about inflation. Sorry, inflation rates. Maybe I'm just looking for the wrong thing. Still don't have it. Oh yeah. Okay, good. No, no, it's just out of order. All right. Okay, this is what I'm actually going for. Um, PPI, CPI. Okay. Hmm. Negative numbers. What's the inflation rate in the United States? Definitely a positive integer. Oh my God, right? They have deflation, not disinflation. Disinflation is we used to have 8% inflation. Now we have 5% inflation. What's the inflation level? Five. That's disinflation. It's falling, but it's still inflation. You're like, it's still 5% higher than it was before. Like, it's still a problem, right? They have deflation. Prices are cheaper this month than last. Quite a different world, huh? So the uglier this gets, look at their okay, year over year. Whoa, what? Wait, what? Year over year is negative. Wow, that's amazing, right? So technically, they are in recession now. In one way, you would look at it. I mean, there's different ways to measure. Usually, you use GDP or something, right? But anyways, let's just say much different than the rest of the world, huh? Now that it is definitely negative deflation and growing, remember, this is a future predictor. This is inflation before it hits the consumer. Well, this is deflation before right? So this is what it points to is inflation is negative, but will likely get worse. Deflation's bad. It's hard to get out of. So the point I'm trying to make here is maybe the government will want to do something. Maybe it'll someone is going to get fired somewhere, and yeah, and the new guy is going to do um, some impressive strategies to get them out of deflation. But that I wonder, like I'm thinking forward here. I wonder if the IMF will revise down global GDP. Okay. It doesn't bode well, I think, for a lot. So let's compare negative inflation. be- Okay. Inflation matrix. Okay. Let's zoom in beyond World War One. Let's zoom in a little closer. Let's go to 2013 to now. Okay. Do you think inflation has gone up globally? Yeah. Here's the 2013, 2014, 2015. This is the world all broken down by currency. And then we had this giant spike. We peaked out last summer, well, October, anyways. 11% in the UK was the peak. Euro, 11%. Wow. 7.75 for the United States. Yeah, yeah, yeah. Okay. So where are we now? Oops, I didn't mean to do that. So where are we now? I don't think wait, Australia and New Zealand isn't calculating properly. Cool. Let me grab a screenshot of that. Hang on. Snip. Good. Publicly shaming. I'm going to shame people again. All right. Hang on. I got to delay this. Okay. Delay, 3-second delay. And I go new. Cool. And now I got to grab a screenshot. And I got to open that up. And yeah, cool. Got it. All right. So nonetheless, we can figure this out. All right. So where are we? Okay. The UK still has a lot of inflation. The United States has gotten inflation way down, 3%. Canada about 3%. Euro still at 5.5. Inflation way up, 3.3 in Japan. That's a big one to pay attention to. 3.3% inflation in Japan. What's inflation in China? Negative a half. There's a difference, isn't there? These are competitors. Japan has 3.3% inflation, which is really high for Japan. And China is in deflation. Oh, look at that. Aussie and Kiwi kicked in. 6% inflation in Australia, 6% inflation in New Zealand. Switzerland, very low inflation. This is part of our alpha. Do you remember how QuantBox predicts Swissie's strength? Or at least the Swiss National Bank not cutting interest rates next year? Yeah. Okay. Germany not reporting right, and I don't know why we even have it there. There's probably no table for it. Look at how it fixes itself, and there's missing tables on some of these. I'm looking at the Aussie Kiwi. See where it says Aussie Kiwi 00, and then I move over 1 month. Aussie Kiwi 8 and 7. Yeah. Okay. So it's just there's missing data in some of these tables, but nonetheless, at least we see what's going on now. Cool. Um, Maybe they only report quarterly or something. I don't know. We'll have to look. But nonetheless, still fairly high inflation in Australia and New Zealand, but slowing economies. The UK is basically in recession and still has incredibly high inflation relative to its peers. It's not really good. The UK is not really doing well. But I wanted to point out like, wait, China is in deflation and the UK has 8% inflation. Holy smokes. So I think it's going to cause a crisis in China where Chinese billionaires are going to, I was joking about it, move from Louis Vuitton all the way down to Coach, maybe even Michael Kors handbags. You're like, no. Yeah. Yeah. Hey, you got to know your handbags. You're like, I'd rather die than wear a Michael Kors handbag. Yeah. Anyways. Um, so holy smoke. So China might need to stimulate. And that would be very interesting if that created some new demand, huh? Tim, if you have to adjust these, Tim. So if it only goes to 213 or to 2013, you have to adjust the handle. By the way, isn't this cool that we actually have a live database and not some stupid little website with little images that like you can manipulate the data? You're like, no, snap, stop it, wait. Yeah, I love it. So again, a quick look, where are we? United States doing pretty well relative to its peers, huh? Green is good. Switzerland is really good. United States is really good. Maybe we're going to play with wanting to own these currencies, or at least know what to do when these currencies, these economies, because really it's not really a currency, is it? It should be USA. It should be Switzerland. So we're measuring inflation in the economy, not the currency. So, anyways, these economies are doing quite well relative to their peers, and yeah, the UK is doing poorly. Now, this goes back a few. We're still, that's still the July number. Okay, here's an old one, June. I don't know why it's not updated. Just it is what it is. Okay, but still really high inflation relative to other people, other economies. So you can see, and this is, I suppose, why Australia and New Zealand's missing in the upper. It seems like they do only, we're grabbing the quarterly for some reason. Maybe it's how the government releases it through their database. But anyways, we make that distinction. So that's why they're 0 0. So I don't need to do that. Send the developers the information, but you can see going back, inflation is lower in those areas, and probably because they're dealing with a consumer, in this case, China's their consumer, um, that is also not just disinflationary, but deflationary now. All right. So, anyways, there we go. So we've analyzed some of that to translate, like if New Zealand, or sorry, if Switzerland, okay, is in a scenario like this, like best case scenario versus all the other economies, what does that look like in our future? So again, I go into the central bank area. I can get a snapshot of Switzerland now. Okay. And you can see very, very, very low inflation expected next year. Who tells us this? The Swiss National Bank. So this is pulled right out of the Swiss National Bank. So they have low inflation now, and they have the expectation of inflation all the way back down to basically 1% and holding steadily all next year. And here's negative interest rates in Switzerland. Then they went positive in the third quarter of last year. They jacked interest rates up here just above 1.5, 1.85, and all that. And they're not going to raise and they're not going to cut. Their stability in a world of chaos. And this is when we go to Switzerland, this is what the future looks like all the way to 2025. Stable. Now, they are providing guidance here. This is their guidance. And because of that, relative to other economies, Switzerland is going to be a source of safety in the world next year. When other central banks might be cutting, New Zealand already thinks that next year is going to be disastrous. Do you think it's they're following China, the Chinese economy, in their own forecast? Remember, this isn't my opinion. This isn't an algorithm trying to figure things out. This is QuantBox talking to the Reserve Bank of New Zealand. Okay, cool. And so maybe that's so how do we put all that together? Well, you have your long term, that might give you a long term vision. I don't want to look at this because this is the oil trade I made, but I'll show it to you anyways. See, I was right there, and then I had to leave the office. Yeah, the line I drew like 2 weeks ago. Mm. And then it was right near, and then I'm like, I'll catch a pullback, and then I had to go away again. Anyways, that's it. I don't want to look at it anymore, but that's the money I could have made if I had done my job. All right. Okay. Crying over world's smallest violin, right? All right. So what did I want to do? Oh yeah. What if you were interested in combining those two forces? We would go to Swiss franc. And you look at this one. And you'd say, Wayne, generally speaking, on the long term, I think I'm a bear. Bravo! Right? You don't have to be a rocket surgeon to see that this is down. But you can also, let's say, have some sort of expectation that this will continue another year or more. Whoa. Okay. Not all the year. When does QuantBox tell us to expect risk on? Help me predict the future. Tell me when QuantBox expects risk on in the global broad market of everything, aggregate demand to increase. Help me predict the future. Jim says third week of August. That's painfully accurate because QuantBox isn't that accurate. Now that's my experience, right? But what is it? You're right. September to what? We know there's a turning point right around September, not necessarily all of September. It could be right, but there's a turning point in September. Yeah. And then to what point? Well, once again, painfully accurate. QuantBox doesn't tell you a day. Let's just say to the end of the year. Again, you guys are giving answers that are like, that's me. No, QuantBox doesn't say that. That's what I say. But remember, I have a different brain. I don't have an algorithm. I have human experience. So a lot of those answers are what I would tell you, but I use a lot of those I do things like the third week of this and the third week of that as an anchor so you actually remember it, right? But what does QuantBox say? Somewhere around September all the way to the end of the year. Okay, it doesn't tell you a day or a week, but it tells you monthly inside of a seasonal, right? All right. So what does that look like? September, October, November, December. You see that period there? Let me get my drawing tool. Epic. Let's see if it'll start. Okay. You see this? September, October, November, December, and then January. So is it possible that we're long-term bears, but it still does that for 90 days and then we resume? Y- Yeah. Nice to know now, though, isn't it? Can you imagine you're sitting there, you're a hedge fund manager, you're sitting at a fancy restaurant with tablecloths even and no TVs. Yeah, really fancy. And you're having a conversation about the markets because they're considering maybe giving you some money. Throw a million your way and see how you do. And there's more to back it, they always say. Great. If you do well, Denise, there's more to come. Uh huh. Anyways, Wouldn't it be cool if they ask you a question about the markets and about, what, trades and stuff, and you're like, "Well, I'm really looking forward to selling the New Zealand dollar versus the Swiss franc in January." They're like, "Wait, what? Jeez, it's August." Like, what are you talking about in January? Well, I'm combining 20 years of aggregate data or data on aggregate demand, and I'm coinciding that with the divergence in central banking policy between the Swiss National Bank and the Reserve Bank of New Zealand, and blah, 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 blah. And you just earned a free dinner and the respect of a client. If you're thinking 90, 100, 120 days in advance, and you could back that up with clear research and a coherent thesis, yeah, you got it. You got it. Most people can't think that far ahead because they don't have the data. So if they don't have the data, what do they say? Everything's in the price. Uh-huh. You don't know what you're doing. The other one is diversification. You're like, buy everything. That's your strategy. When somebody mentions diversification, they don't know what they're talking about. And the second thing is, right, if they're like price is everything, it just told you that they can't put together a strategy. Be careful. I'd be careful. So, anyways, we can do our research and say, does support matter? So you grab support, you drag it across. Did this support matter in the future? Yes. You see? And then you drag this support across, and there might be a scenario in the future where this might fall a little bit more. And then in the fourth quarter, rally up. And then the first quarter, drop it like it's hot. Okay. Now, I might say, well, Wayne, that's great. But what about today? Well, if you can't do that, today is irrelevant. Today will always be random to you. You understand that concept? If you can't predict the future, you probably don't understand what's happening now because that's the trend. And there's a rationale behind the trend. But yes, we can be less esoteric, and yes, we can get into a shorter time frame. But what do we know about the shorter time frame? Why do we want to be so esoteric now? Wayne, just get me into a trade. All right, here's a trade. Cash. Stay out of the market. What's going on? Nothing. Okay. Nothing substantial, even just in the moment. Okay. Is that useful information? Yeah. The expected outcome of your trade is probably zero. Look at how flat things are right now. Okay. If you watch, I think we're well over 100 videos now on the QuantBox YouTube channel. If you watched 100 of them, I'd be surprised if you saw a scatter plot that looked like this. This is what's happening right now. You know what's happening right now? Nothing. Most things are up, including things that shouldn't be up, and most things and the things that right things that should be down are slightly up, and things that are up are slightly up. There's not really. I'd almost call it an abnormal distribution. What do we do know? There's some bearishness in all the stock markets. Oops. Whoa, whoa, whoa. Hang on now. delete. Okay. Uh, we see that, right? S&P 500, Dow, Nasdaq, okay, Japan, all the stock markets are down except these two. So Europe is up, everybody else is down. That's kind of weird mixed bag, right? Oil, remember my plan was buy it between 80 and 78 and take it to 100. Oh my god. Really going to remember that trade for a while. So anyways, it's the biggest winner today except for the DAX. Okay. Remember DAX and FTSE are not really expected to be up. Okay. They're supposed to be down here with everybody else. See, it's bullish but unexpected. That's how you read the scatter plot. So it's up but not expected. Oil is expected to be up, and it is up. And I hit the psych level, hit my trade plan, hit the target, hit everything, and didn't trade it. Son of a. But anyways, hopefully it was a good example of how to trade plan, and a terrible example of how to trade. So anywho, I missed it. Boo. Just to see where we are. Oil up 5% this week. Nice. Very nice. Gold doing okay this week, 1%. I mean, that's not huge. But remember, I think, did we get to 1900? Yeah. There was a potential of even $1,800. Uh, but right now, it doesn't seem to want to be doing that. So let's take a look at gold. So, commodities. Okay, cool. So the trade plan on this sucker is riding the 21. Okay. So at London Open, you had an opportunity to sell it off that 4 hour 21. Target is not back down to 19. Okay. So maybe 1900 by Thursday afternoon. And then back up to 1925 maybe, and then down a little bit more. So now I got to back out here. So what I'm trying to say, let me delete this and let me draw it, is maybe something like this in the near future. Okay, that gets us down to 18 and change. But then if there's continuation for a little bit, maybe down. Because the velocity is slowed down, this is becoming less and less likely. Because if we have that aggregate demand, and remember, what does aggregate demand mean? The demand for everything. So if the demand for everything picks up in September, that'll include gold. So we will probably bottom out closer to it looks like 1820. No, 1890. So as time goes by and as things slow down, it actually looks like this. Let me try to draw it with arrows. Okay, this is the price action that we've already had. And then we come down to here and then maybe here and then pop back up. Okay. And a higher high by the end of the year. Denise has a question about the interest rate differentials should have moved money to New Zealand, right? Only if you're confident. If you were afraid, it wasn't enough. There's a difference. So the interest rate differential in a bullish market is different than the interest rate differential in a bearish market. So if people are like, "Oh my god, I can pick up 4% in New Zealand?" Yeah. What they're saying is not enough for the risk. Yeah. Andrew's talking about a real GDP, Metro Atlanta, GDP of New Zealand. Yeah. Uh, yeah, yeah, that's pretty funny, Andrew. Yeah. So Atlanta and New Zealand are about the same size economy. Yeah. Put it this way, Denise. New Zealand used to pay me 8.75%. So maybe on a historic, right, level, I look at New Zealand and I'm like, chump change. Okay. Yeah, it's high, but to me, it just shows weakness. Like, why are we at, almost 9%? I mean, imagine New Zealand is safe and is quiet and right and stable of an economy at not almost 9% inflation. Well, back in those days, that attracted a lot of money because it was risk on. Yeah. So, anyways. So really what it says is we've probably printed whether it's precisely a bottom um, or not precisely a bottom, just below 1900 could be it, not just for the month of uh, of August, but the sort of the new bottom of the year. So what does our year look like? We rallied up. I'm only going back to November, but think of the context of seasonality. November and December. What does QuantBox tell you? Take your profit, walk away. January down to February, and then March. Okay. March is another swing period of risk off back to risk on. It's in QuantBox. I know this from 20 years of trading experience. So I knew it before QuantBox. So I was really happy when QuantBox confirmed it for me. Oh my God. Because, it could be bias, right? But I'm usually a seller in January and I buy it back at near the end of March. So, anyways, not just gold, everything, right? So, anyways, so somewhere in March it flips. Okay. April, May, and then it topped out here. Okay. Topped out. Okay. Fine. Fine. And now we're here. Most of this is disinflationary, inflation falling in the United States. So that brings gold down. But my point is that this little spot here, and really I should draw it like this so you can see that it's a double bottom. We need to say to ourselves, will it make a lower low or will it move to the top of the range or maybe even top of this range or maybe even higher than the top of the range? Well, what do we know? What can we lean on to make this decision? Now, first of all, technical analysis. It's always right. It doesn't tell you why, it just tells you what's happening. So it's never wrong. Okay. So if you get down to this and it's a bottom, let's do a different color so it's easier to see. I guess I'll do like a bright green. I'll make it slightly fatter. Okay. So if we come down to here and then start to turn up, do we play it like a double bottom and go to the range and maybe the top of the bigger range or maybe even a new higher high? Well, technically, there's nothing to say that a higher high is in the works or to the top of the bigger range. There's nothing technically that says that. So if you were a technician only, all you could tell is this. Okay. What about QuantBox? QuantBox says Well, if you're trading this asset in this time frame, and I'll put the next 2 months here, I'll make it a big window. If it goes up in that period, stay in till the end of the year. And it says this because of analyzing what happens in this time period over the last 20 years, and then basically makes an EMA out of it by saying, well, what if we only traded the last 5 years, what usually happens in this time period? And it says, go for a home run. So then you go back to what's happening now and you're like, yeah, I think I'll buy here, drop a stop, and go for it. Okay. Here's an January this year opened out of position. What you're supposed to do is ride the 4 hour up. Okay. And we even blew through the monthly pivots in January, just crazy out of control. And then it collapsed. What QuantBox will tell you is, even though, right, it said expect this to happen in the month of January, your job is to use technical analysis to confirm that it's happening. Let's see if I can get a 4H on this and go back that far. I have to turn that off and turn that off. Go back to June and January. Jan. Okay, cool. All right. So in January, we don't know anything. We don't know anything. We just know somewhere in January, based on seasonality, we probably want to take profit on a long gold position. Okay, cool. We open out of position. This, by the way, I'm using technical analysis straight out of investorbootcamp.com training. Okay, I mean, very specific here. So if you don't know what I'm talking about, or you like what I'm talking about, you need to be a member of investorbootcamp.com. It's very exclusive. It costs $88 a year. It's way out of the means of most people. But if you have the means, take the training. So, anyways, in a scenario like this, QuantBox says somewhere in this period here, you should get ready to take profit. Okay, great. Then when the month actually opens, we're above the M3 and it says you're out of position, OOP. Yeah, you know me. And that says ride the 4 hour 21. Okay. Up. So you're a bull. And yes, you're very interested in taking profit, but it's outrageously bullish. So you may have been very conservative and took profit at this M4. That is correct. If you did that, you're not wrong. But then you're like, but Wayne, it went up another bajillion dollars. Yeah, but based on your analysis, that was unlikely. You perceived risk. You had seasonality to confirm you should be concerned. And you did what needed to be done. That's never the wrong decision. Someone else might have said, okay, well, for whatever reason, okay, taking it up, okay, taking it up. Okay, you see the consolidation here, right? The higher highs are less high and the lows are lower. Okay. And then, okay, and then you see right there, first week of January, the whole thing collapses. Yeah. So you don't know what day to plant the seeds, or in this case, you don't know what day you're going to harvest the grapes to make wine, but every single day you're in the field, and every single day you're watching the weather, and every single day you're watching the temperature at night. Every single day you're taking little samples of the grapes, and you're like, maybe tomorrow. And then there's one day you say, now, harvest. And that's how it's done. It's usually an old man walking through the fields somewhere in France. And he says, maybe tomorrow. And all the field hands are waiting. You're paying hundreds of people that are just standing around ready to pick. There's a lot of pressure on this one person. And he's squatting in the field. He's got dirt in his hand and he's even smelling it, maybe even tasting it. And he's been watching the weather all night. He's been out in the fields at 2 o'clock in the morning. Okay. No, it's still warm. It's not cool, and all this kind of stuff. And he's sampling grapes. Oh, that's so close. They're so good. I want a little bit, just a little bit higher sugar content if I can get it. The nights are still warm. And then one day, a cool fog rolls in, and he's like, now. Weather's changed. Today, pick the grapes. That's you out in the field. Huh? You know Jean-Luc Picard's brother? Yeah, that's you. Yeah. Hey, kids, that's a Star Trek New Generation reference. Yep. So, anywho, that's how you do. You should know that in that particular case, that's harvest season, but you use technical analysis to confirm what day you harvest so that you can, well, the better you do that, the more, the better your wine will be. It's just that simple. And so there's a trick, there's a finesse there, right? Think of like actually making wine. Isn't that like an old school kind of business? Been around for thousands of years. And there's still a beautiful art to it, right? And yet it's incredible science and chemistry. I was in Napa a few years ago, and there's the Caneros region, which is a cooler region of Napa. I know the area very well. I lived in California for 20 years, so I know Napa like the back of my hand. And I was there, and I'm at this particular vineyard, and I'm like, I say to my wife, "Oh snap! They have red wine. Like they shouldn't grow red wine in this region. This is like a Chardonnay region, like, and it's even like Chardonnay you'd probably throw into a champagne, right? Even dry Chardonnay because it's too cold. There wouldn't be any sugar in there, so you'd throw it into champagne, right? And no, they're growing red. And so I'm like, I got to try some of this red. So I order the red, and I'm like, oh, dang it, this is good red wine. And one of the family representatives came on by to the table, and they're like, "Hey, what do you think?" Typical thing like talking to a bunch of tourists. What do you think? And they don't even listen to the answer. Hey, thank you for giving us money. We appreciate it. We love being rich. Thanks for buying our wine at extraordinary prices, right? Uh, and I'm like, this should be impossible. And their eyes just lit up. I'm like, what the heck? You're not growing, like I challenged him. You're not growing this wine in this vineyard. You're not growing this red. Where are you getting the grapes? Is it way up north past Calistoga? Like you got another? And they're like, no, we grow it here. I'm like, no, you're not. Like, really, I'm challenging you though. Like, you can't grow this here. And guess what they said? Even though that making wine is just throwing a bunch of grape juice into a barrel and letting it sit for a while, they're using real-time satellite data to measure the slope of all their rolling hills and also measuring in real time the density of the soil, the drainage of the soil, the composition of the soil, right? And the moisture content of the soil. And they plant grapes by the 16th of an acre. So they'll say on this one hill that just happens to have this angle, that just happens to have this soil composition and this drainage level and this level of sun for this amount of time throughout the year, so they can do the sun survey of this, so they can predict the future going out weeks and months in advance. And they say in this one spot on God's earth, we will grow this exact one type of grape to make this one bottle of wine that you are now enjoying, because it's impossible everywhere else. But in that one spot, we can make this wine and it's really good and we can prove it scientifically. And that's what I'm talking about here. Yes, you got to have some finesse as a trader, but you got to have science-backed methodology too. And that's the beauty of QuantBox, of mixing those fundamentals with sort of that market activity. So we know the fundamentals like Kiwi, Swiss franc. Those are the market fundamentals. Then we go to seasonal. We're like, it's perfect, but not now. Maybe in 90 days, let's swing back and regroup and take a look at that. And then we could look at what's happening today and look on the scatter plot and say, and then you look at the gauges and it says, okay, be careful, nothing's happening, but you might see something, but you might be seeing a mirage. And I think of that, the sort of the power that we have of being intuitive traders, but backing that with, real data. So we can say, I love shorting the Kiwi Swiss franc somewhere around January. And if I wasn't on it now, I'm too late. Someone else is going to look at that trend and start shorting it. And you're like, perfect trade 6 months ago. Good job. Guess what? It ain't going to work. And we know that. And we'll regroup and we'll sell it high later. So that's very powerful. At least it's automated. I didn't say it was easy. That might be very high level esoteric stuff. But at least you're now starting to see it. And maybe over the period of time, you'll learn how to incorporate it better and better and better. It takes a while. It's automated. I didn't say it was easy. Okay. She's pretty, but she's complicated. Yeah. So, anyways, uh, hope you appreciate these videos. If you're watching on YouTube, you better click the thumbs up button because this is free. Okay. Now, everybody else, thank you for being here at such an early hour. I appreciate you. Peace on earth. May the pips be with you. May your profits be above average. I'll see you when I see you. Cheers.